Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Thursday, December 18, London Open. Here are the key themes shaping the session. A central bank heavy day, with the Bank of England and European Central Bank in focus, but all eyes first on U.S. inflation that could overshadow the lot. And in commodities, oil is soft on a firmer dollar and weak China demand, even as Venezuela's production risks build in the background. Europe heads into the open on the back foot as traders brace for that central bank bonanza. The Bank of England is expected to cut its policy rate, reflecting softer inflation and higher unemployment in the UK, while the ECB is widely seen standing pat. That rate divergence is already showing up in price action, with the euro firmer against sterling as markets lean into BOE easing. Meanwhile, sterling yen is steady as investors also hold fire ahead of the Bank of Japan. In the US, consumer inflation for November is due at 13:30 GMT. Consensus looks for a slight uptick in the annual rate, a profile that would cool hopes of an early Fed cut in January. But there's a twist. The report may be incomplete because October data collection was disrupted by the government shutdown, so monthly details could be thin, and any knee-jerk market move may fade as investors question the quality. Layered on top are recent dovish signals from a Fed governor that have weighed on the dollar in recent days, leaving today's print as the decider for near-term dollar tone. Across Asia FX, the yen remains soft ahead of the BOJ update, keeping dollar-yen near recent highs. The Australian dollar is under pressure as the greenback firms into the data, while India's rupee is getting support on hopes the central bank will keep leaning against dollar strength. In Switzerland, the trade surplus narrowed in November, and dollar franc is treading water into the U.S. numbers. Turning to commodities, West Texas Intermediate is edging lower on that modest dollar rebound and signs of weak Chinese demand. There's a potential offset developing, though, with reports that Venezuela may be forced to shut in oil production within days as storage fills up amid a U.S. tanker blockade, a medium-term supply risk. Gold is softer on profit-taking after recent highs as traders square positions ahead of CPI, though the safe haven narrative still hangs over the metal. Policy and geopolitics are in the mix too. Brussels' carbon border levy is set to squeeze revenue for Western Balkan power exporters, and an opinion in Brussels urges designating Yemen's Houthis as a terrorist group, a reminder of shipping and sanctions risks that can ripple into energy and trade. For markets and sectors, the setup leans cautious. A slightly firmer dollar into the data weighs on commodities and keeps risk in check, while the expected BOE cut tilts against sterling and supports euro crosses. If the BOJ stays patient, yen softness persists. Looking ahead, watch the BOE at 12 p.m. GMT, US CPI at 13:30 GMT, and the ECB soon after. The BOJ remains a key risk into Asia tomorrow. On my watch list, I'll be watching the pound against the US dollar, looking for a downtrend if the BOE cuts and guides cautiously. I'm also watching euro sterling for an uptrend on UK-led easing expectations, and dollar-yen for a push higher if the BOJ holds steady and US inflation comes in firm. In commodities, I'll watch WTI for choppy trade as weak demand meets Venezuela supply risk, and gold for two-way volatility around the CPI print. In emerging markets, dollar-rupee could drift lower if the Indian central bank steps in again. The takeaway: it's a big policy day overshadowed by imperfect US data, so expect cautious positioning and be ready for headline-driven swings that may not all stick. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.